Joining us now to discuss this is former US Deputy Secretary of the Treasury Department and current Carnegie Distinguished Fellow at Columbia University School of International and Public Affairs, Wally Adeyemo. Wally, thank you so much for being with us here on Global Lens. Let me begin by asking you, what implication will this rate cut have? Because the Fed Chair, Jerome Powell, had warned that this is going to have limited impact.
Well, thank you for having me. And I think the chairman put it well when he said it was a risk management cut. Ultimately, it's important for global viewers to remember that in the United States, the Federal Reserve, unlike central banks in other countries, has a dual mandate. One is around price stability, but the second part of that dual mandate is around full employment. And it's the full employment challenge that the rate cut was meant to address in terms of, as you mentioned, we have a weakening labor market in the United States, but inflation remains too high, largely driven by the president's use of tariffs. So what the chairman and the vast majority of members of the Open Market Committee decided to do was to put in place a rate cut that would provide a bit more room to the economy in terms of giving them the ability to ensure that the labor market didn't deteriorate even more. But what we've seen so far was that the dot plots, which is the prediction of open market members of what they're going to do in the future, was quite divided between 1 and 2 cuts going forward, because there's risks on both sides. There's risks to the inflation outlook as it's moving higher or to the side, and there's also risk to the labor outlook. And the thing that's going to determine what the Fed does going forward is going to be the data. Will we see higher inflation in the data that comes out over the next few weeks, or will we see an employment picture that becomes even more cloudy? Depending on which one of those two things we see will determine what the Fed does going forward and how that impacts the real economy.
Right. Also, if you could explain to us, Jerome Powell made it clear that he does not mean that further rate cuts were inevitable. How do you expect U.S. tariffs to impact the U.S. economy and inflation going forward?
I think the chairman made clear that, to date at least, tariffs have had less of an impact on inflation than people may have expected, but it has put us in a position where the progress that has been made in terms of inflation coming down over the course of this year has stalled, and the inflation rate is higher than the Fed's target today, and I think people are waiting to see if inflation goes higher. What we do know, though, is for most American consumers, when they go to the grocery store or they're buying clothes for their children who went back to school, they've seen prices go higher, driven by tariffs that have been placed on goods that have been bought for those Americans. So the question becomes whether that translates into higher inflation in the overall economy. And if that's the case, it gives the Fed less room to be able to maneuver in terms of cutting rates going forward in order to make sure that they're in a position where inflation remains contained. So from the standpoint of the Federal Reserve, they have a set of tough choices coming up, but what they've determined to do is to make sure that they are data determined in terms of the decisions they make, and they have a number of data points that will come out over the next few weeks that will influence the decisions they make in their future meetings.
Right. What impact do you expect on the job market? There have been concerns in August about the job growth slowing down, and there were concerns about lower immigration that were raised by the Fed chair as well.
So for the macroeconomy, we've seen the labor market slow down significantly, and there was an expectation that the labor market was going to slow, and that's driven by demand in the overall economy, but also by the uncertainty that's been created for the economy given the use of tariffs and the changes in economic strategy by the current administration. The hope is that that uncertainty will fade away and that businesses will go back to making investment decisions. But ultimately, the biggest driver of the U.S. economy is the consumer, and consumer demand will drive what happens there with the labor market. So I think the Fed is in a wait-and-see mode to see if the labor market picture improves or deteriorates. But the change in immigration policy has had a tremendous effect in supply of labor in the country, especially in certain fields. If you work in the agriculture field and you're a farmer, it is far harder to find labor today. And that's true for a number of other areas, including hospitality, where labor is harder to find today, as both undocumented immigration has decreased, but also documented immigration has decreased, making it far harder for parts and segments of the U.S. economy to find the labor that they need. And what happens when you have less labor is you have to pay more for the people who work for you, which will often translate to higher prices for consumers. So from the standpoint of the Federal Reserve, they're waiting to see how immigration policy, how tariff policy, how a number of the policy decisions that the current administration has made plays into the real economy, and whether that means that we're going to have higher inflation or lower employment. And the Fed has some room, but not a great deal of room to respond to that. Ultimately, the Fed's job is to try and use interest rates to meet their dual mandate, but they only have a certain set of tools that they can use to try and stimulate the economy. And what the rest of the administration does, what Congress does, has a real impact, on a material impact on what happens with the U.S. economy going forward.
Right. When we speak about the India-US trade deal, do you think such a trade deal at this point where the US economy finds itself in is going to be positive for the US as well as for India if this deal happens in the coming weeks?
The trade deal between the United States and India is both economically and strategically productive for India, for the U.S., but also for the global economy. My hope has always been that the U.S. and India would work together to reach a deal that would be good for our economies, but that the U.S. would work more broadly with our allies and partners to reach agreements that would allow us to lower tariffs on each other while working together to confront China, whose anti-competitive behavior is having an impact on the U.S. economy, on the Indian economy, and on the global economy. We'll have to see what comes of the conversations with the U.S. and India, but getting to a trade deal would be positive for both of our economies and also for the global economy.
If this deal has to be really effective, currently we're looking at a trade deal, a limited trade deal in goods. But do you think the services side of it, the non-tariff barrier side of it, will be more important if any trade agreement between India and the US has to be effective in the long run?
The key there is the long run. In the long run, the United States and India are going to be major service players around the world, and finding ways to lower barriers in terms of services is going to be critical. Goods, of course, do matter, and oftentimes what we find is that when manufacturing grows in a country, services grow around it. That's what we're seeing in the United States when it comes to building semiconductors. The jobs created in the semiconductor plant is important, but critical to that are the service jobs created around the plant that are helping to drive the economy. So fundamentally for the United States and India, we both want to be manufacturing powers in the world, but that manufacturing in lots of ways will drive a robust service economy. So getting to a comprehensive deal that includes services is going to be critical, not only to our economy today, but to the Indian and American economy that we want to have over the next 10, 20, 30 years.
Right. And very briefly, my last question, do you expect China, US to resolve their trade differences?
I know that the president and his team are focused on resolving trade differences with China. My hope is that the United States will actually work together with their allies and partners to make sure that we're confronting the Chinese together, because what China has done in terms of its anti-competitive behavior doesn't only have an impact on the U.S. economy, it has an impact on the global economy. And ultimately, my view is that in order to get the Chinese to change their behavior or to make sure that the global economy is less impacted by it, we're going to need to work with countries like India and our allies and partners in Europe to do so. So while I hope that the U.S. and China are able to resolve their trade differences, I do think that doing so without our allies and partners will mean that the deal will be less robust and will be less likely to succeed over time.
Wally Adeyemo, thank you so much for joining us here on Global Lens, giving us your view on the Fed rate cut, the situation that the American economy finds itself in, and the importance of a India-US deal, which serves the interests of both countries in the long term. Thanks once again for being with us.
Thanks for